star wrestler appears out of nowhere sprinting down the aisle to save the match.
It's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned even if there are swerves ahead.
thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get to Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit, because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of...
Profits will help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy, because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues. that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth, and listen, any innovator to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean,
Feathering in
to a layman like me?
mean
Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber. There will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place, and we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
everyone.
everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company. And he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Live from my home in New Jersey, streaming on YouTube. It is Tuesday, November 24th, 2020. And yeah, everything is awesome. Well, it certainly seems that way. If you just look at the equity markets, the Dow rallying to top 30,000 for the first time. And hey, everybody, reminder, we are still in the midst of a global health pandemic, in case you forgot. So we're going to be talking about that a lot over the next 4 hours. All right, let's get you going on this Tuesday with a check on that trading day. Let's bring in Charlie Pellet. Another record, Charlie.
Another record indeed. Look at the Dow Jones Industrial Average with a 30,000 handle. History on this Tuesday, November 24th. The Dow up 436 points as I speak, up 1.5%. S&P surging 57 points, up 1.6%. NASDAQ up 164, up by 1.4%. And worth putting those year-to-date numbers in perspective, NASDAQ now up by 34.25%. The Dow up 12.52%. The Dow, I should say, is up 5.2%. It is the S&P that is up now by 12.51%. 10-year down 5/30 seconds, 10-year yield 0.87%. Gold lower, down 1.8%, down $32 the ounce at $18.05. West Texas Intermediate crude up 4.3% at $44.91. Travel leisure stocks surging today among the big four on the airlines. UAL up 8% right now. American Airlines Group up 9.6%. Delta up 5.4%. Southwest up by 3.3%. And checking the big three cruise line names here in the United States. Carnival Corp up 10%. Royal Caribbean up 6.9%. Norwegian Cruise Line Holdings up 5.7%. And that's the Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Masser on this Tuesday. Let's set the Business Week agenda. To do that, let's bring in Katie Greifeld. She's cross-asset reporter at Bloomberg News. She's back in our Bloomberg Interactive Brokers studio. Dave Wilson is also with us, stocks editor at Bloomberg News on the remote access from New Jersey. Dave, you know, if you're a bull in this market, you're pretty happy. But let's not forget that Main Street and Wall Street, they're not the same thing.
No, they're not. And, certainly, you've kind of seen that really for the past 8 months now. I mean, ever since stocks have started rallying from the lows of March, there's been this sort of disconnect between what we're seeing in the market and what we're seeing in the economy. And it certainly shows up on a day like today, when you have energy stocks taking off, with crude oil above $45 a barrel here in New York, and, the more economically sensitive areas of the market really leading the way. If you look at the 11 main industry groups in the S&P 500, that's pretty well evident at this point. Just consider that, beyond energy, you got financial companies, raw material producers, industrial companies, all at the forefront of the game. Whereas, you look at healthcare and the makers of consumer staples like food, beverage, tobacco, trailing. I mean, that said, all 11 groups are up, and it's a really broad-based advance at this point. 5 stocks up almost in the S&P 500 for every one that's down. So, it's a pretty solid move here.
All right. So, Katie Greifeld, you agree? Pretty solid?
I would say so. I mean, if you just look at the numbers, it just feels like a full court press in the stock market. I mean, the S&P 500, the Russell 2000 hitting record highs today. And it's interesting, you also see tech up as well. If you look at the NASDAQ 100, it's up 1.5%, but it's really those back to normal names that are leading gains. You look at Carnival, MGM Resorts, Planet Fitness. They're all having great days, as is Boeing. And that's a big reason why the Dow was finally able to push past 30,000 after it feels like we've been on 30,000 watch for, a long time now.
Well, listen, guys, we know how this works, right? And go back a month, go back 3 weeks ago, go back 2 weeks ago, go back to just after the election. There was a lot of stress, certainly out there in kind of the world at large. We were watching virus numbers go up. We were seeing, a contested U.S. election. There were a lot of concerns. Since then, we've had 3 companies come out and talk about their progress in vaccine development. We're starting to, and I'm finding this increasingly with the CEOs that I talk to that say, listen, we're not out of the woods yet. We know that. But we're starting to kind of get an idea of maybe how 2021, Dave, looks. And that means we've got some visibility.
Yeah, absolutely. I mean, there are a number of companies that are still kind of reluctant to give much of a sense for the fourth quarter. sort of in keeping with what they did in March and April. When
Well, maybe not giving numbers, Dave, but at least saying, okay, like we're starting to see the path forward.
Yeah, absolutely. And I'll give you a perfect example of that. Biggest gain in the S&P 500 right now, Dollar Tree up 13%. Now, they didn't give fourth quarter forecast per se, but they did say that, sales at their two chains, because they've got Dollar Tree and Family Dollar, that they're higher on what they call a same-store basis for the first few weeks of this quarter than they were last quarter when they beat analyst estimates. So now you've got a stock that's up 13%. It does go to show you that, even with the last few weeks, you're seeing it, and certainly to the extent that people are looking ahead to this quarter and the coming year, I mean, there's some reason for optimism here.
Well, Katie Greifeld, I feel like whenever there's any doubt, though, the optimism comes quickly back into the tech market. So much for everyone saying, throw out the big tech. I mean, the trade, continues to, propel the NASDAQ certainly higher here.
That's true, and I know we've talked about it on this program before, but it makes sense. When people were dumping tech last week, the week before last, I mean, it does make sense. You want to sell the winners to buy the losers that have a better outlook. But, I mean, if you think about the companies that are in the NASDAQ 100, all those FANG names, they're going to do well in an environment of better growth, probably. If the economy is doing better, that's not a death sentence for companies like Facebook and Amazon. This rally can certainly, of course, broaden out, and they might not rise as much as names that have just been beaten down the past few months.
Right.
But it's not necessarily a reason to sell them right away.
Well, what's interesting?
Just throw in Tesla while we're at it.
Dave Wilson, I love you. Mind meld, because it's exactly the story I pulled up on my Bloomberg, because it hit the $500 billion mark.
Yeah, and absolutely. And since this company was named to the S&P 500, it doesn't even go in there until the 21st of December. So we're talking about now the 6th trading day. It's up 36%.
Exactly. Man, Kathy Wood, I just go back how many years ago when people were doubting Tesla, and she made her base case, fundamentally in terms of these industries, these companies that are disrupting, and she was spot on. And it continues to be such a big story here in 2020, but it's just pretty remarkable to see that Tesla run. Dave, quick cheese on your chart of the day that's coming up.
Oh, we've already mentioned what's happening with indexes. The Russell 2000 is playing some serious catch-up to the extent that it may end up with a record month.
Kind of wild this time that we're living in. All right, guys, thank you so much. Dave Wilson, he's going to be back a little bit later on with his stock and chart of the day. He is Bloomberg News stocks editor. Katie Greifeld, thank you so much. Cross-asset reporter at Bloomberg News. She's back in our Bloomberg Interactive Broker studio. All right, so we've got a record on the Dow topping 30,000. We're going to obviously continue to watch that as we get to the closing bell. But so important as we face another wave of COVID, thinking about and doing something about preventive health. We keep hearing this from our medical community. Dr. Rachel Eva Drew is co-founder of Modi Health. She's going to join us on preventive health and wellness programs. Also on the virus, we've got the Business Week story on the data heroes that are the COVID tracking project, filling really a big government hole. On the Biden cabinet and the president's refusal to concede, we're going to check in with Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino, a favorite of mine. She's going to be back with us. And 'tis the season, and boy, what kind of a holiday shopping season will it be? We've got the president and CEO of the International Council of Shopping Centers. We'll check in with her. Also, we're going to talk about cold storage, the next hot thing when it comes to real estate. And our market watcher, you've heard her several times on our air. She's been letting the dogs out and investors in on one of this year's hot investments. We're talking about Chewy. We're going to see what Hillary Kramer has to say about that investment now. We've also got HP earnings after the closing bell. So a lot coming up in the next 4 hours. In the meantime, the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number, kind of small, $2.11. The national average for unleaded gasoline is $2.11 a gallon. It is the lowest for this time of year since 2015. And while AAA expects the coronavirus pandemic will keep more people at home over the holiday, they estimate 95% of travelers will go by automobile. So check it out. All right, right now, let's check out world and national news. For that, it's over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Well, President-elect Joe Biden is crafting his administration, announcing today his national security team. It'll be led by his long-term advisor, Tony Blinken, who will serve, if confirmed, as Secretary of State. And former Secretary of State John Kerry will lead on climate change.
Together, these public servants will restore America globally its global leadership, and its moral leadership, and will ensure that our service members, diplomats, and intelligence professionals can do their job free of politics.
Biden said he's pleased that his administration has officially been allowed to begin the transition process, which means access to funding as well as offices. Senate Democrats are asking YouTube to take down misleading election-related videos. Bloomberg's Amy Morris has more from Washington.
The senators say they have deep concern over election misinformation on YouTube, especially videos targeting runoff elections in Georgia. Hours of footage have cropped up in recent weeks, questioning the election results and pushing unsubstantiated claims of voter fraud. YouTube didn't take those videos down, but did say that they've made them harder for people to find. The senators also asked YouTube to share how much advertising revenue it's earned from videos showing election misinformation. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, while the country sees a surge in coronavirus cases, the White House is moving on with its holiday plans that include a full host of festivities and holiday parties. Melania Trump's spokeswoman says attending the parties will be a personal choice. The CDC has been pleading with Americans not to spend the holiday with people from outside their households. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, appreciate that update. You're listening to Bloomberg Business Week. Carol Master joining me right now is Charlie Pellet of Bloomberg News. Charlie, man, I've been talking about this all morning. New York City is going to have vehicle checkpoints at key bridges and crossings during the Thanksgiving holiday period. They will strictly enforce its coronavirus travel quarantine. Remember back in the spring when Rhode Island was stopping troopers? I think Rhode Island troopers were stopping people who were coming into the state. Well, that's kind of what this is, but now it's New York.
Exactly. And I just do want to pass along some coronavirus-related headlines from the Bloomberg, Carol. This out of France. France's President Emmanuel Macron has announced a gradual lockdown easing from November 28th. They do plan to open ski resorts in January and says from December 15th, the lockdown can be ended. Shops will be able to reopen and the lockdown will ease gradually from Saturday. So these headlines coming out of France as we talk about what's happening here in the United States.
Well, it's interesting because France's number of COVID-19 patients in intensive care, it's forecast to fall below 3,000 by the end of November and below 1,500 by mid-December. That's by some forecasts coming out of the country. So what we're seeing is, and we're watching this, right, Charlie? What's going on in Europe? What's going on in the UK specifically? The second wave certainly came there before it came here. And so we're starting to see them. They had locked down, gotten some of it under control. And so maybe that makes sense that they're perhaps a few weeks, if you will, or maybe a month ahead of what we're seeing in the U.S. because it certainly feels like our trajectory, we're headed in the other direction.
And that is so important as to why I wanted to bring those headlines in, just to put the two in context and see where we may be heading. But in the meantime, some sobering headlines from Governor Cuomo saying that New York State's heading toward a major surge in corona cases, at least a 20% increase over the holiday season. They say at the low end, experts in New York could see a 20% increase in cases between now and January, with the positive test rate reaching 12.46%.
And the WHO says we're going to have to probably take precautions against COVID well into 2021. Charlie, thank you. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Energy companies surging as oil moves above $45 a barrel. Bitcoin rallies past $19,000. Records right now for the Dow, the S&P, Russell 2000, Philadelphia Semiconductor Index, the SOX, and Dow Transports. Right to the numbers. I'll give you the why in a moment. The S&P up 54, up 1.52%. The Dow up 420, up 1.4%. NASDAQ up 148, up by 1.4%. The NASDAQ 100 index also up 1.4%. 10-year down 6/30, 10-year yield 0.87%. Gold is down 1.8%, $18.05 the ounce, lower by $33 the ounce. West Texas Intermediate crude just below $45 a barrel now, $44.88 on a barrel of WTI West Texas Intermediate, higher today by 4.2%. Big day on Wall Street. Again, history with the Dow surging above 30,000. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So you've been listening to the virus headlines on this Tuesday, New York City with checkpoints around the Thanksgiving holiday. We've also heard the World Health Organization come out and say that people will probably have to take precautions against COVID-19 for the next year as countries continue to vaccinate and actually need some time to vaccinate their population. So just some of our headlines on this Tuesday. Let's bring in, though, with an interesting perspective on really our whole wellness situation, if you will, against the pandemic. Let's bring in Dr. Rachel Dew. She's board-certified doctor of natural medicine, and she's also the CEO of Modi Health. She joins us on the phone in Los Angeles. Dr. Dew, nice to have you here with us. How are you? What has your world been like on the West Coast, and especially with some of your patients?
Hi, Carol. Well, thank you so much for having me on. It has certainly been an interesting season, right? So we are all having to make so many adjustments and transitions, not just in how we care for patients, but also how we care for ourselves in this time. So we're seeing a lot of those adjustments and the need to be more flexible and to really take personal accountability.
What does that mean, though? Break it down. So if I'm a patient and I'm listening to that, I'm sitting at home and I've got stresses of working, I've got stresses of taking care of my family, what are you telling me?
Absolutely. So, look, this pandemic, we have the concerns around catching COVID-19. We have that, but also the pandemic has really caused an uptick in many other health crises, right? From mental health and emotional health to physical health, everything from injuries, illness, and chronic disease. And, this is really due to patients avoiding in-person care due to safety concerns and putting off treatment and things like that, right? Mm-hmm. So telemedicine has been providing a solution to meet these concerns, and now telecare is really easier and safer to access in order to get that continued care, right? So we're seeing this as a major shift that we've needed to take in order to care for ourselves, and also practitioners needing to care for their patients. But what we also see is that the need is greater now more than ever for a whole person care approach, really an integrative approach. And that really includes not only traditional healthcare, prevention, but also well-being.
Well, listen, and I'm going to be quite honest with you, you're preaching to the choir, because I'm someone who certainly believes in kind of that holistic approach when it comes to healthcare, having done yoga for 20, 25 years and, believe in meditation and things like that you really do need to take care of your whole being. It's just not physically, it's not just about physical ailments, but it's also about mental well-being. And I do wonder, is there something about this time of crisis, and it's conversations that I've had, to be quite honest, with a bunch of my guests about, are we looking at, our health very differently? Will we come out of it being smarter, preventive health, and thinking about kind of holistic care when it comes to our well-being?
Absolutely. And I think that that's one of the positives that's coming out of this pandemic. What we're seeing, so at Modi Health, we're the only telemedicine and telewellness integrative platform in the industry.
What does that mean? Because there's lots of telemedicine out there.
Sure.
We've been talking about, we just talked with Susan Line yesterday. She's a venture capitalist saying, that's one of the things that all of a sudden it has just taken off. So tell me about what that means, that integrative platform.
Sure, absolutely. So while there are many telemedicine platforms out there, and there's a lot of wellness platforms out there, like health clubs are moving classes, and yoga, as you mentioned, are moving classes online, there's really no marriage between the two of this holistic care and traditional care. So at Modi Health, on our integrative platform, we offer access to virtual care with both traditional medical practitioners as well as complementary alternative and natural, and then also wellness. Things like mental health practitioners, life coaches, fitness instructors, nutritionists, all of those different types of needs under one virtual roof to be accessed. And I think that that's what's critical right now. And we're seeing at Modi Health, so many people are focusing on wellness and prevention through a more holistic approach or a whole person approach to health. And so people that are coming to our platform are really concerned about being as healthy and also as resilient as possible.
Who is your demo? Who comes to your platform?
Every person you can possibly imagine. So we have, all different types of care available for people that are younger demographic, millennials. We have baby boomers and everything in between. Mm-hmm. Really, the pandemic has created this massive need to shift and begin using online platforms to access care. So it's really invited people that may not have considered doing that type of care before. It's really invited them into using and experiencing the ease and safety of telecare.
Well, and one thing I want to get into, and I've got to do a little bit of world and national news, but I do want maybe something to think about, and then we can come back and discuss. But I just do wonder about the traditional insurance industry and healthcare program and infrastructure that's set up, if they are increasingly embracing kind of alternative forms of treatment. We've seen something like acupuncture gone from kind of being an outlier to being much more accepted. And I do wonder if we're starting to see even a more significant shift when it comes certainly to reimbursement for different types of treatments and what you're seeing. So sit tight if you would for a second, Dr. Du, and then we'll come back and continue. We're going to get back to our guest at this hour. We're talking about Dr. Du, board-certified doctor of natural medicine and CEO of Modi Health, joining us on the phone in Los Angeles. Quick check on the markets, because once again, we see risk trade. It is on. We're just hovering at our best levels, up about 1.5% on the S&P 500. The Dow up about 421 points, a gain of 1.4%. And the NASDAQ's up about 144 points, and it is good for a gain of 1.2%. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Tuesday. I'm Carol Massar. We're going to get back to Dr. Rachel Dew. She is the CEO of Modi Health, and we'll get back to her talking really about holistic thinking when it comes to our well-being. So we'll continue that in just a sec. Hey, let's get back to your top business stories. A check on that trading day. Here is once again Charlie Ballard.
All right, I thank you very much. Holding close to records, off session highs, Carol, but right now the S&P up 49 points, up 1.4%. Stocks have rallied to records. Oil has surged past $45 a barrel. The dollar fell as the formal start of President-elect Joe Biden's transition and his cabinet post-elections spurred investors into risk assets. Dow Jones Industrial Average making history, climbing to 30,000 for the first time, led by a 5% rally today in Boeing. So here's where we stand. The S&P 500 index up 50, now at 3628, up 1.4%. The Dow is up 393 points, up 1.3%. NASDAQ is up 138, up by 1.2%. 10-year down 730 seconds. 10-year yield right now 0.87%. Gold is down 1.8%. An ounce of the precious metal down $32 now at $18.05. And crude West Texas Intermediate up 4.2%, $44.86 right now on West Texas Intermediate crude. Hospitalizations are on the rise because of coronavirus as vaccines are in the works. Dr. Amish Dalja is senior scholar at the Johns Hopkins Center for Health Security. He was interviewed this morning on Bloomberg Television and Radio.
For the next several months, hospital capacity in the U.S. and around the world is going to be the major factor because these vaccines are going to be coming, but they're not going to be available in big enough quantities to make a dent on all of the patients that are already hospitalized. There's around 80,000 Americans hospitalized now. That's something that we have to get through, and it's going to only continue as we go through the Thanksgiving holidays and we see that expected surge that's going to occur.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. And among the drug companies with recent vaccine announcements, shares of AstraZeneca down today, down 1.75%. Pfizer is up 0.3%. And Moderna shares, they are trading lower by 3.4%. Recapping, stocks at a record. The Dow right now 29,984, off session highs up 393, up 1.3%. S&P up 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much for that update. I want to get right back to our guest, Dr. Rachel Dew. She is board certified doctor of natural medicine, CEO of Modi Health, still with us on the phone from Los Angeles. So, Dr. Dew, I totally get what you guys are doing, and I do think when it comes to healthcare, we do need to think about kind of top to bottom, all the layers that make up a person's well-being, right? And there's different forms of treatment. There's certainly, traditional medicine. There's, evolving medicine. There's just different things that are out there, and you really do feel like it's maybe not one person, but multiple people who really have to look at someone and say, okay, here's the full picture, right? And here's the different things you can be doing. Having said that, I do feel like kind of newer waves of thinking or newer ways of thinking when it comes to healthcare, your traditional insurance companies aren't so great to embrace it, at least not so quickly. So where are we on that?
Absolutely. I am so glad that you brought this up. It's something that I'm hugely passionate about. So we have a unique approach at Modi Health since we are founded by practitioners. And we really believe that patient care needs to shift. The patient care should be dictated by doctors, not health insurance companies. And right now, most holistic or alternative care, as you mentioned, is out of pocket, which not only limits access, but it really restricts access to those who are unable to afford that kind of care out of pocket. So at Modi Health, we've addressed that by making consults more affordable. But as we're shifting and as we are seeing this whole person care approach, and we're seeing so much more research and data that is pointing to the future of health, including that type of whole person care, with the future of health insurance reimbursements, there's a huge market demand, and that's only going to continue to grow. So insurance companies will eventually need to address this by increasing wellness care, complementary and alternative care coverage, and also reimbursement. So we need to shift the focus on keeping people well versus just treating health crises and problems once they arise.
So how do we do that? I mean, if anything, the pandemic has unearthed and laid bare once again is the inequities that are out there, right? And it's easy maybe for some of us to say, okay, I can focus on well care, right? Wellness care, because I've got the time, I've got employers who understand, and I've got a great health care plan. There are those folks who are just trying to, pay the rent and keep food on their table for their families. And, health care is often a emergency situation, if you will. And that's really important if we're going to raise the wellness of society. So how do we deal with that? Which is so important, right? I mean,
Yes,
we keep doing things that people who are already in a good place get to kind of tap into. But if we're gonna learn anything from this past year, right, is figuring it out how more people get to benefit from the successes of society.
I completely agree with you. It's such a critical point. I mean, we're really seeing this shift when it comes to wellness and preventative and alternative care. We're seeing that it's becoming only accessible by the wealthy. So it's becoming, a social level of achievement to be able to access. But we've got to make this type of not only care, but healthy lifestyle choices and options more affordable and accessible to the masses. And, that's something we're really passionate about, and we work really hard at Modi Health to do, not only by making, consults more affordable to live virtual care, but we've come up with some creative solutions, and really it's going to take all of us doing, putting our minds towards creatively solving this problem. So, what we've done is we've created a health streaming service. So where someone might not be able to afford meeting with a nutritionist or a personal trainer or a health coach, for example, they might be able to afford a $9, a month virtual streaming service that gives them access to all different types of health and wellness classes and health education and fitness classes. So it's really about getting creative in order to solve this.
Right, which is what it's going to take. It's interesting. The Bloomberg New Economy Forum was just held virtually with global leaders, and one of the verticals, one of the pillars is all about health. And this whole concept of, how do we learn from what happened this year in terms of the virus? But more importantly, too, is how do we fix some of those ailments, whether it's heart disease, whether it's lung disease, whether it's cancer, that, certainly has an impact on people generally, but also holds back society from being even more prosperous than it could be. So these are good conversations to have. Dr. Du, thank you so much. Good luck, and want you, we'd love to hear back from you as you guys continue to proceed with what you're doing. Dr. Rachel Du, she is board certified doctor of natural medicine. She is CEO of Modi Health, joining us on this Tuesday on the phone from Los Angeles. All right, we do want to get another check on world and national news. For that, back over to Nancy Lyons. She is in D.C. Hey, Nancy.
Hey, Carol. Well, President-elect Joe Biden says he's proud of the team of foreign policy experts he's nominating for his administration. It'll be led by his longtime advisor, Tony Blinken, as Secretary of State, and former Hillary Clinton aide Jake Sullivan as National Security Advisor.
It's a team that reflects the fact that America is back, ready to lead the world, not retreat from it. Once again, sit at the head of the table.
Biden has promised to seek multilateral approaches to common problems like climate change, the coronavirus pandemic, and arms control. Los Angeles County, the nation's largest, is on the brink of a stay-at-home order just days before Thanksgiving. A swell of new cases yesterday pushed the county over an average of 4,500 cases a day. Public Health Director Barbara Ferrer.
At the end of the day, more people are becoming infected at their jobs, in their homes, and in their community. And this results in much more transmission across the county.
A stay-at-home order, if imposed, would be the first such action since mid-March, when California Governor Gavin Newsom issued a statewide order that closed schools and most shops. A statewide curfew took effect over the weekend. Well, it's something out of 2001: A Space Odyssey. Officials in Utah say while conducting an aerial count of bighorn sheep in Red Rock County, the air crew saw a shiny metallic block sticking out of the ground. This is one of the officials at the scene.
Okay. Who does this kind of stuff?
They say there's no evidence on who's behind the silver monolith or how it got there. It's in such a remote area they won't say where it is to avoid people getting hurt trying to find it. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Charlie Pellet. Where was that, Charlie?
Where was Princeton University?
No.
Oh, they didn't say exactly.
When Nancy was talking about.
All I can think is Pellet's planning a trip to go take a look at that monolith there. It's.
I was trying to check that out and trying to look for a picture of it.
Exactly. Where it is, what it is, why it's there.
We all want to know. We all want to know.
Exactly. And with all of the other things going on in the world, what are we talking about? We're talking about monoliths. But
we are. Well, we all need kind of a break from some stuff every once in a while.
Boy, you are so right about that.
Well, having said that, you mentioned Princeton because this is a story among our most read on the Bloomberg today. It's by Janet Lauren, who covers all things academia, universities, the finance of higher education. Princeton inviting all enrolled undergrads back to campus for the spring term that begins in February. They're going to take precautions, but welcome back.
Exactly. And this story just resonates on so many levels.
Mm-hmm.
If you are a member of a college, staff, administration, faculty, president, there are so many issues in bringing kids back. The economics of this. Colleges need students on campus. Towns need to have students on campus, especially when their economy is tied to that college or university. Parents, they're thinking, hey, if Princeton's opening up so junior can go to Princeton, does that mean my kid can get out of the basement and start forget about remote learning and return to real schools?
There's an underlying thing I'm hearing. Charlie Pellet needs to be back on campus.
Oh man, I would. Do you ever see the movie Back to School? But this time around, I would go back instead of telling the teacher my thoughts. I would actually learn something and focus. But we digress.
So listen, they do say parties and most other social gatherings will still be prohibited. Masking and social distancing requirements will apply throughout throughout campus. And they did caution that they may need to lock down again, Charlie. But this is, listen, we watch the numbers. That's how it works.
And very briefly, Carol, if it's Princeton's today, who else might it be in the future?
Exactly. We will watch because people certainly watch what happens when it comes to the Ivies. All right, Charlie Pellet, thank you so much. You are listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ all advancing. Dow Jones Industrial Average at 30,004 right now, up 415 points, up 1.4%. The Dow topping 30,000 for the first time. Investors piling into risk assets as a series of market-friendly developments unleash animal spirits on Wall Street. The S&P up 53, up 1.5% at 3631. A record, by the way, on the S&P. NASDAQ shy of a record, up 1.2% right now at 12,021, up by 141 points. 10-year down 8/30 seconds. 10-year yield 0.88%. We've got gold down 1.8%, 18.04 the ounce. Gold is down again, $33 the ounce. And West Texas Intermediate crude up 4%. Surging $1.72 a barrel, helping lift oil stocks today. WTI $44.77 a barrel. United Parcel Services set up its own dry ice production and will provide portable super cold freezers to its healthcare customers as the courier prepares for the massive rollout of vaccines against COVID-19. UPS shares, they're up now by 3.1%. Rival FedEx up by 2.3%. And that's the Bloomberg Business Flash.
It is indeed. And we're going to actually talk about cold storage being kind of the hot new thing when it comes to real estate. We'll do that a little bit later on our broadcast. All right, you are listening to Bloomberg Business Week, and safe to say there are many heroes that have stepped up during this global health pandemic, and that includes this really cool story about a small army of data gatherers. Most of them are volunteers, and they have become perhaps the most trusted source on how the pandemic is unfolding in the U.S. Let's get into this story with Bloomberg Business Week editor Joel Weber. He's on the phone in Brooklyn, along with Bloomberg News U.S. healthcare team leader Drew Armstrong, reporting once again for Business Week. Drew with another incredible story, Joel.
Yeah, we like to keep Drew busy. I hope to have many more Drew Armstrong stories in our future. This is one that he came to us with, and as we started talking about it, I was like, wow, this is actually just a great story for the moment, because these are basically data heroes. And we're talking about the people behind the COVID tracking project. And at the beginning of the year, we didn't have any data about how many cases there were, and you would have expected the federal government to fill that void, and federal government's still not there, and these folks have just kind of kept it going. So Drew, tell us more about who they are, what they do, and you know, I want to know more because you also did some of this data entry yourself, actually.
Yeah, you know, it was a fascinating story to work on, in part because I think that it really revealed some of the weaknesses with this country and its ability to react to a unknown crisis. You look at disease agencies like the CDC, which I have to say are full of very kind, very smart people trying very, very hard. But when they were confronted with this kind of new unknown disease, it showed us how bad we actually were at being able to find out what was going on in the country. And this project was basically an effort to try and answer the question of how hard are we looking for COVID, and this was back in early March, and how much of it are we finding? And what they began to discover as they did the really gritty work of just calling around states and scraping state websites and pulling data from states was that we weren't looking for it nearly as hard as we thought we were, and we didn't really have a great grip on how big the outbreak was or wasn't. It's then evolved into this thing, which is a very authoritative source of statistics on how COVID is spreading, where hospitals are, what the death count is, and things like that. But at the start, it was just fundamentally about asking, you know, what's going on, and are we finding as much of this stuff is actually there?
Well, Drew, I got to say, as we all kind of pat ourselves on our back, you know, enter a couple of journalists and then a really other smart investor, basically.
Yeah, you know, the one thing I will say with these folks, and you mentioned there's a handful of journalists, Alexis Madrigal and Robinson Meyer over at The Atlantic, who are kind of started a version of this. One of Alexis's college friends was this guy, Jeff Hammerbacher, who actually started the data team at Facebook. And they teamed up with a woman named Erin Kassane, who essentially is her job title kind of defies description, but she builds communities and works with tech tools and journalism. And what they eventually pulled together was a basically just a Google sheet to go and start answering these questions and cataloging these data. But it took this really unique combination of curious journalists, some serious data and numbers talent, and somebody who could help build the communities they had. And the community is something that they emphasize over and over again. This thing is powered by volunteers, people who show up into their Slack room. It's the only place this organization exists, and do the hard work of going to state websites and pulling this data every single day. And it's just a lot of work to be able to pull this together, but they've been doing it for 9 months. It's amazing that they built this kind of volunteer-powered engine to do this stuff that's basically data gathering day in, day out, to better understand this pandemic and bring some sense to it.
And Drew, you raised your hand to actually help enter some data. How'd that go?
This was wonderful of them. They really trusted me, and they said, we want you to understand, both what we do, how we do it, and also the culture that is behind this whole thing and the volunteer effort. So they invited me into their Slack. They put me through a data gathering training that they did with everybody else. So I was on a Zoom call with lots of other people around America, seeing everybody's living room behind their computer camera, just like I was. They taught me how to go through their process, and I worked a data gathering shift, entering everything from the, hospitalization data in Maine, to what was going on in some other states. One of the things you realize when you do this work is just how disjointed that data gathering system is. Some states have wonderful portals that is, updated every day. The definitions of what counts as a test, as a positive, so on and so forth, are very clear. Others are not at all. I mean, Hawaii, when I was doing this, the place you had to go to get the number of hospitalizations in the state was the lieutenant governor's Instagram account, which, when you think about a country like the United States, that's insane. Like, that is not where we should be getting this type of public health data.
So, Drew, let's just stay on the data for a second, because I think one of the things that they've also sort of done that you kind of talk about in the story is that they've actually sort of effectively helped standardize what the data is even. Can you talk more about that element of the story and the effort?
Yeah, one of the things that is really, really, really important that I think is hard to appreciate until you've tried to make sense of medical data is that it's vitally important that you have kind of standard definitions for what stuff is, so that a test means a certain kind of test, or do you separate out the different types of COVID tests that get run into different categories? And they ran across this problem of, states didn't all report the same information. Sometimes they would report things that seemed like they were similar, but in fact were not. They started to give states grades, letter grades, basically say, okay, this state gets an A+ for the type of data it reports, this one gets a D. And the reason for that was they had someone on their advisory board who had worked in government who said, I know this seems stupid, but government officials really love grades. And, when they started giving out these letter grades, one of the things they saw was that the states that had done well, they had public health officials and the governors out there saying, hey, we got an A+. They gave us an A+, this prominent website that everybody's looking at thinks we're really great. And they began to see other states make efforts to get more transparent, to get better about standardizing their data. They have helped kind of push along the quality of this data to better understand this.
Listen, there's so many good moving parts in this story. I love where you say the project is a demonstration, of citizen know-how and civic dedication at a time when the country feels like it's being pulled apart, right? So when all else fails and you feel like things aren't working, like you see the community come together, and we understood that the importance of community, especially when it came to COVID, how important it was, and to see them come together on the COVID tracking project is pretty remarkable and really makes you feel good ahead of this Thanksgiving Day holiday. Drew, thank you so much. Really appreciate it. We'll put this story out on Twitter for everybody. Bloomberg Business Week editor Joel Weber, along with Bloomberg News U.S. healthcare team leader Drew Armstrong. Read everything that Drew puts out at Bloomberg.com. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. You're listening to Bloomberg Business Week, and we are Bloomberg Radio.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, November 24th. A rally underway. History for the Dow topping 30,000 for the first time. Investors are piling into risk assets as a series of market-friendly developments unleash animal spirits on Wall Street. S&P at a record spurred by the formal start of President-elect Joe Biden's transition. News that all but removed the threat of a contested transfer of power. Investors also woke up with a clear sense of what Biden's Treasury Department will have in policy preferences after he nominated Janet Yellen to the post. So here's where we stand right now. S&P at a record again, up 55, up 1.6%. The Dow surging 440 points, up 1.5%. NASDAQ is up 149 points, a gain there of 1.3%. 10-years down 8/30 seconds, 10-year yield 0.88%. We've got gold down 1.8%. $33 lower the ounce at $18.04. Crude surging 4.1%. West Texas Intermediate up 1.8%, $44.83 a barrel. Travel, airline stocks also surging today. Among some of the cruise line stocks that are rallying, we've got Carnival Corp up by 10.4%, Royal Caribbean up 7.4%, Norwegian Cruise Line Holdings up by 7.2%. And among some of the airlines that are seeing movement today, they're all flying higher. We've got UAL up 8.8%, American Airlines up 8.9%, Delta up 5.9%, Southwest up by 3.1%. Former Fed Governor Rick Mishkin says Janet Yellen, President-elect Joe Biden's choice for Treasury Secretary, understands the need for fiscal expansion. He was interviewed this morning on Bloomberg Radio and Television.
Appreciates the independence of the Federal Reserve, will be strongly supportive of it. And so in that sense, there's no issue at all. Having strong cooperation, it's always been true, by the way, that the Federal Reserve Chair and the Treasury Secretary meet periodically. I think they always had a breakfast. I can't remember.
The S&P 500 index up now by 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
All right, so this caught our attention. It's among our most read stories on the Bloomberg. It's a top story on this Tuesday about how Amazon is doling out hiring bonuses as high as $3,000. It's all about making sure it has enough people to get through the busy holiday shopping season. So everyone's happy, right? Not so fast. Let's get more on this story. Our go-to when it comes to all things Amazon, Spencer Soper. He's Bloomberg News technology and e-commerce reporter, follows Amazon really, really closely, and he's back with us on the phone in Seattle. So, Spencer, good to have you here. So what's going on?
So I guess we have an example of just how tricky the job market is right now in terms of employers trying to keep people happy. So yeah, Amazon was is giving out bonuses of up to $3,000 because it's got to make sure it has enough people to meet this explosive demand in online commerce that just keeps growing, and this is going to be a record-busting holiday shopping season. But that's angered existing workers who have been toiling all along, and many of them got vouchers for turkeys, as little as $10. So there's this kind of disparity in how Amazon's taking care of the existing workers who have been working all through the pandemic, and then the new recruits that they just need to get through the holiday shopping season.
Not to be ungrateful, right? And we see this, right, where people get hired and they come in at one salary and then somebody comes in later and they get a better salary. Like this kind of stuff happens, but it does make you wonder about what Amazon is thinking, that they're willing to do this and they know it's going to get out there publicly, right? About the discrepancies, what were the, inside conversations that they had about this before doing it, knowing that there were going to be workers who are like, what? They're getting $3,000 and I got a $15 turkey voucher?
Yeah, well, that's a good point, and we don't even know if there were conversations like that because they're just trying to manage through chaos and meet demand. Yeah. And so on these bonuses, they offer bonuses every year, and so they're common. We just haven't seen them quite this high, this $3,000. And so the significance there and the new twist there is that even though a lot of people are out of work, they're still scared of COVID, and so Amazon's having to ratchet up the amount of money it will pay to compel new workers to come in, and then that's angering the workers that are already there.
Well, so how is Amazon, Spencer, you know this company, you talk to a lot of people who are willing to go, tell you what's going on behind the scenes. How is Amazon handling workers and making sure that they stay safe amid COVID?
Amazon's been pretty public about that and all of these safety measures. They're going to spend more than $10 billion this year on a variety of things, including, masks and temperature checks at the facilities and COVID tests of employees and stepped up cleaning. But a lot of that cost is also simply lost productivity. And that's where, because of social distancing, these facilities that Amazon has that are already, will be pushing capacity in a normal shopping season, now are just not as productive because they have to space people out. So they're getting less work done in their normal facilities, and so that's putting an extra strain. So not only they have the higher shopping demand on one end, on the other end, each of their facilities is less productive than it would usually be because of the need for social distancing.
Yeah, exactly. Well, whenever I think about Amazon and just the amount of workers, especially as they continue to hire, and I mean, they hire I feel like nobody else out there in terms of the size of people that they continue to bring in to meet demand. I do wonder, in terms of unionization, what progress or, are there more steps likely to make it maybe a possibility here in the U.S.? And already, I think in your story, you point out it happens. It is unionized over in Europe.
Yeah, they've avoided unions in the U.S. There is a new drive that was just launched in Alabama. Interestingly, Alabama is the place where they got $10 turkey coupons. I think that's the lowest that we saw.
Okay.
But so there's a new campaign down there. It's incredibly hard to form a union, and there's a lot of tools that employers can use to prevent unions from happening, up to and including just simply firing people, even though it's supposedly against the law. The penalties are very soft. And so what you can often see happen is if someone agitates for a union, an employer can simply fire them, and then that puts the onus on that worker to fight them, and the only real consequence for the employers is to pay them back wages and rehire them.
So I do wonder, I think they report next in late January, their next earnings report, and I do wonder, Spencer, I'm thinking as an investor, how these increased costs of paying higher bonuses perhaps to get workers in, right? Because Amazon can't meet demand unless they get the workers to show up. As you said, there's concerns about, COVID obviously and social distancing. Will these costs, these higher bonuses, end up showing up, they're going to, right, on the expense line when it comes to reporting? And I do wonder how it impacts the company financially, potentially.
Yeah, it is going to affect them. It is going to put pressure on their profits. They've projected that. They've said as much. And I think that investors are very tolerant as long as Amazon's still showing this strong growth. If Amazon can muscle through this and with marginal profits but still take care of its customers and accommodate all of this growth, that sends a strong message to investors that this company can, it is well run and can function through this pandemic without letting people down. It would be much more significant long term to Amazon to say, you know what, sorry folks, we can't bring this to you. Go shop somewhere else. That would be much more devastating for investors than a high cost holiday quarter.
Hey Spencer, just got about 45 seconds here. I mean, what are your expectations? What are you hearing about what the holiday season will be like for Amazon, and will they be able to meet the demand, especially as I keep hearing from everybody? I've already seen it. I'm already doing it. I'm ordering online. I've started earlier than before, and that's how I'm going to shop this holiday season.
Yeah, a lot of that's going to depend on exactly what you said. Are shoppers going to heed the warnings? Are they going to shop early? And a lot of that's going to fall on the pain is going to fall on the consumer as well. If you're a procrastinator and you wait to the last minute, you're going to have to pay plenty to get the stuff on time if you can get it at all.
All right, we're going to leave it there. Hey, Spencer, thank you so much. Really appreciate it. Spencer Soper, he is, of course, Bloomberg News technology and e-commerce reporter, writing on all things Amazon. You can check him out as well on Twitter, and you can find him at Spencer Soper. Amazon shares, by the way, up about 69% so far here in 2020. And a quick check on the trade today in an overall higher market. We see Amazon, that stock is up about 0.7% in today's session, so just off its highs of the days. All right, let's get back to world and national news. For that, once again, over to Nancy Lyons in her 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. Well, Joe Biden says America is back ready to lead the world, not retreat from it. The president-elect announced his national security team today that will be led by his longtime advisor, Tony Blinken, who will serve as Secretary of State.
America, at its best, still has a greater ability than any other country on earth to bring others together to meet the challenges of our time.
Biden also named former Hillary Clinton aide Jake Sullivan as national security advisor. The team also includes Linda Thomas Greenfield, an ambassador to the UN. She would be the highest-ranking black official so far. Well, hopes that a peaceful transition might actually happen has sent the Dow in record territory today, pushing past 30,000 for the first time. President Trump spoke briefly about it.
That's a sacred number, 30,000. Nobody thought they'd ever see it. That's the 9th time since the beginning of 2020. And it's the 48th time that we've broken records during the Trump administration.
Analysts also credit the stock surge to the news that former Fed Chair Janet Yellen has been tapped to serve as the next Treasury Secretary. She is widely expected to support government intervention to bolster the economy. United Parcel Service is preparing to help with vaccine distribution, announcing today it has set up its own dry ice production and will provide portable super cold freezers to its healthcare customers. UPS can make as much as 1,200 pounds of dry ice an hour near its Worldport Air Hub in Louisville, Kentucky. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. So if you're like Charlie Pellet, you're, mega rich U.S. citizen, you've got a super yacht, a Gulfstream jet, and a Manhattan penthouse. There's one thing you also have to have, Charlie Pellet.
And that is a second passport. This story written by our Ben Stupples and Devin Pendleton.
Can I just say, I think this is my favorite story of the day.
It was a fascinating story without a doubt. However, two key questions that
Don't
they did
burst
not,
my bubble,
no,
Pellet.
Two great questions, Carol, that they asked, but they didn't. The story didn't answer, and that was for not a lack of trying. Now, this story here talks about Eric Schmidt, formerly of Google, who has that second passport, and the second passport is for Cyprus. So the question is, why Cyprus? And why is Eric Schmidt doing this? Well, they did get comment from, the spokeswoman for Cyprus's government declined to comment, but our reporters certainly tried to get that there. And then what are the benefits to Eric Schmidt for getting the second passport, specifically with Cyprus? So it perhaps falls into the category of stay tuned, but two big questions that, in my mind, stuck out in this story.
I have to check, because I think Business Week actually did a story specifically on these second passports. Listen, when everybody was upset about, to be fair, the current administration was upset about politically the direction of the country. I think the magazine did a story about people buying into second passports. The benefit of owning a second passport, this story notes, range from potentially lower taxes, you've got more investing freedoms and less hassle traveling. It can be had for as little as $100,000. I love when we say that, perspective. $100,000 is a lot to a lot of people. The so-called citizenship by investment programs haven't historically been as popular with Americans. It mainly has often been people who are in countries with less human rights, less freedoms, and so on and so forth. But we have definitely seen, Charlie, an uptick when it comes to Americans. So don't you already have two passports?
One is enough, right? Perhaps like wives and homes.
Am I telling? Oh, whoa.
There you go. Anyway, my thoughts on the topic, Carol.
Well said. All right, Charlie Pellet, thank you so much. You are listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of excitement on Wall Street today. The Dow topping 30,000, S&P at a record, NASDAQ pushing higher, Russell 2000, Philadelphia Semiconductor Index, Dow Transports, all at records. Stocks are surging. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are surging right now on this historic day. Dow's currently up 451 points. S&P's gained 57. NASDAQ climbs by 158. The U.S. 10-year yield at 0.88%. Oil is up 4%. Gold falls 1.9%. And transports jumped 300 points. Among the main 11 S&P sectors, all were in the green, led by gains in energy, financials, and the materials. And leaders to the upside in the Dow, Chevron, J.P. Morgan, and Boeing. Modest losses for Amgen, Merck, and Procter & Gamble. After earnings, Dick's Sporting was little change. Best Buy fell 7%. And in other news, you mentioned the transports. FedEx hit a record high. Wrapping things up, some of the names porting after the bell tonight include Autodesk, Dell Technologies, HP Inc., and VMware. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. We're going to be busy after the bell and to hear live breaking news over your Bloomberg type squawk. SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Really appreciate it. So this caught our attention, reported for Business Week, and it's about how for people in their 50s and 60s, especially COVID-19 has accelerated big life transitions. I've been hearing about this anecdotally. Let's get into it in this week's edition of the Bloomberg Business Week Small Business Survival Guide. Here with more, Bloomberg News editor Dimitra Casanidi. She's on the phone in New York City, along with Chip Conley, founder of Modern Elder Academy. He joins us on the phone from Mexico. So Dimitra, tell us about why this story caught your attention.
Yeah, this was brought to us by Carol Heimowitz, who's a former business Bloomberg News reporter. And Carol has focused a lot on midlife transitions in careers and in various aspects of life. And this seems to really combine a lot of what we've been talking about. It is a business. It touches both on the specific one, but also on the hospitality industry. And there are challenges, especially when you're talking about people who are making transitions in a job market that's going to be very challenging for them. And in the midst of a pandemic, when maybe travel safety concerns are greater as you get older, depending on your health and all, too. So it had a combination of factors that really seemed like something we wanted to know more about. And Chip Conley and Modern Elder Academy are doing something interesting that Carol talked to them about. And we just thought, let's hear more about how they're handling this very, very challenging time, and seems to be doing something that, is encouraging people to go there and travel and really make changes in their lives.
Well, what's interesting, too, and I feel like it picks up on a theme that we certainly find when we talk to entrepreneurs that start companies, it's often the result of something that personally happened to the individual themselves. So, Chip Conley, come on in on this. Tell us about Modern Elder Academy.
Well, I'm honored to be with you. At age 52, I was asked by the founders of Airbnb 8 years ago to join them because they had this little tech startup that didn't have any background in the hospitality or travel business, and that was my background. And I joined them, and I was twice the age of the average employee. And I came to realize quickly they started calling me the modern elder, and I wasn't sure I liked that. Because I never thought of myself as an elder at 52, but elder is a relative term. Long story short is I started talking to my friends in their 40s and 50s about the fact that they felt irrelevant. And they felt more and more irrelevant. They're going to live longer, but how are they going to pay for that extra longevity that we've gotten in this society?
Well, and so tell us a little bit more. Okay, so I think it's really fascinating, and especially I've been having increased conversations about people about how we kind of look at our lifespan and what it means, right? Especially as we find increasingly that we're all going to go through some different changes. So tell us about the people who are coming and the experiences that they're having.
Sure. So we created Modern Elder Academy, also known as MEA, partly because we're living longer. Power seems to be moving younger in a digital society, and the world is changing faster. And of course, during COVID,
what that meant is people are actually going through even more transitions. We've been open for 3 years. We've had about 800 alums now from 24 countries at our primary campus here in Baja California, which is an hour north of Cabo San Lucas. People come here because they want to actually try to reimagine and repurpose their life and maybe the second half of their adult life. But during COVID, we had to close down in mid-March because of all the obvious reasons. And we were going to reopen this fall, but midsummer, it was very clear with the spikes that were happening that we shouldn't be open. So what we did is we pivoted as a small business, focused on instead what we call sabbatical sessions, which is people coming for extended stays, often a month or longer, and we give some light programming of our basic curriculum, but they're sort of in this open air community because obviously we're in Mexico with great weather, so we don't have to be in classrooms. And long story short is, oh my gosh, we thought we were going to have to go out of business, but instead we're full and people are loving it. So I think if there's a lesson here, being a longtime travel executive, I think that people still want to travel as long as they feel like it's going to be safe. I think that's part of the reason Airbnb is doing so well right now is because people still want to travel, but they want to do it in a safe way. And so we've tried to crack the code on that while also helping them imagine how they repurpose their life.
Yeah, safety. I mean, Airbnb, that's a remarkable one because so they have been doing quite well, and I think that they were able to offer that level of safety, travel places where people are able to go in and have little kitchens or where they're controlling a lot of it. How long do you foresee, Chip, this model being something you guys are going to stick with? Is it going to stay in place for a while? I mean, it's working out quite well, and maybe it's not really a short-term thing anymore. Maybe it might stay around for a while.
And just got about 30, and Chip, my apologies, just got about 30 seconds here.
I'll be brief. I think that in the future, we will have 2 months of workshops, week-long workshops, and then 2 months of sabbatical time where people can come for longer times. Because I think what we've learned is that people want both. So, so pivoting was something we had to do in the short term, but it actually may influence our long term.
Listen, what do they say, Chip? You understand disruption, right? You saw it in the hospitality industry with Airbnb, but I mean, out of crisis often comes interesting ways. Chip, stay in touch. We'd love to hear more. Chip Conley, founder of Modern Elder Academy, on the phone from Mexico, and our own Dimitra Kasanides, editor at Bloomberg News, on the phone in New York City. You're listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. Carol Massar right here on Bloomberg Radio. Coming up, we've got the chart of the day with Dave Wilson. What will it be? We'll find out in just a moment. First up, though, Charlie Pellet. What's going on?
What's going on? I'm waiting for the song of the day like everybody else with Dave Wilson coming up. Do want to begin with a headline from the Bloomberg Professional Service developing story. The Stripe funding round could value it at more than $70 billion. Stripe, of course, the payment software company. The Dow, the S&P, NASDAQ all surging, looking at records right now for both the Dow and the S&P. More importantly, history being made today for the Dow, topping 30,000 for the first time. Investors piling into risk assets as a series of market-friendly developments unleash animal spirits on Wall Street. Maybe that's a clue for the song of the day. We've got the S&P up 57, up now by 1.6%. The Dow surging 450 points, up 1.5%. NASDAQ up 157, up by 1.3%. 10-years down 8/30 seconds, 10-year yield 0.87%. Gold down 1.8%, 18.05 the ounce. And West Texas Intermediate crude rallying 4.2%, up $1.79 a barrel, 44.85 right now on West Texas Intermediate crude. Should point out records as well for the Dow Transports, Russell 2000 as well today. Philadelphia Stock Exchange's Semiconductor Index also up today at a record, up by 0.5%. French President Emmanuel Macron says he will gradually lift a nationwide lockdown from Saturday as he attempts to avoid a resurgence of the coronavirus and damaging fits and starts for his economy. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security. And on Bloomberg Radio and Television this morning, he was asked which countries get honors for doing the best at controlling the pandemic.
I would say that has to go to Taiwan and South Korea. These countries have been able to do, and they were able to do in March and February, what we can't do even in the United States now in November. And they were able to meet cases as they came because they had a robust policy of trying to interdict very early and being very proactive versus reactive. And they sprang into action very early. South Korea and the U.S. had their first cases on the same day. And just look at the difference in the trajectory.
Among some of the drug companies with recent vaccine announcements, shares of AstraZeneca, they're down today by 2%. The ADRs here in the U.S., Pfizer up 0.4%. Moderna is down by 2.5%. Recapping records and history on Wall Street. The Dow above 30,000, up 1.5%. S&P up 58, up 1.6%. NASDAQ at 12,041, up by 1.4%. I'm Charlie Pellet. Bring on the song of the day. That's a Bloomberg Business Flash.
I will indeed. All right, Charlie Pellet, thank you so much. You are listening to Bloomberg Radio. Is it Bruce?
Well, you're in the ballpark. It's not Bruce, but think about, Jersey Shore, musicians. Certainly from the same era as Bruce.
Yeah. Who's another one of the great New Jersey guys, right?
Really? I mean, think about it. You got Bruce, you got Little Steven, or if you prefer Miami Steve, going back to the 70s, Steve Van Zandt. And then I'm looking for...
Is that Southside Johnny, is it?
Indeed.
That's it. Thank you. I had to think for a second.
I knew you had it.
I didn't have to cheat even for that one.
I knew you had it somewhere. It's a song called Coming Back.
Nice. I like it. Perfect.
That sort of explains what the Russell 2000's been doing.
Yeah.
I mean, you heard Charlie Pellet just mention that it's setting a record today, but I'll tell you, this month has really been something to watch. Because if you look at 2020, the story has been it's the larger companies leading the way, the smaller ones being left behind. Heck, you go back to the beginning of September.
Yeah.
And, and on a year-to-date basis, the Russell 2000 index was more than 15 percentage points behind the S&P 500. That's how bad it got. Now, that gap is down to close to nothing.
Wow, that's a big closing. That's a big gap to close, right?
Yeah, absolutely.
Yeah.
And, it really happened this month. Start of November, the gap was 9 points. And just looking at where the Russell and the S&P 500 are now, it's less than 1.5 points. But here's the thing.
What?
As of yesterday, the Russell was up more than 18% for the month of November. Now, it's higher again today. Looking at it now, it's up about 2%. So you figure you're talking 20 now. It's never risen that much in a month, ever.
So what does it mean,
and ever
Dave?
In the case of the Russell, goes back to 1978. That's when the index was first calculated. Biggest gain ever, February 2000, was about 16.5%. So it just goes to show you how much things have changed this month relative to the rest of the year. I mean, it was all about the S&P 500 and the big tech companies. And now, it's those smaller companies, a lot of them cheaper, that you find in the Russell 2000. In fact, I'm going to be talking about one of them in the next half hour as my stock of the day. Just saying. Bit of a preview there.
Nice forward teasing coming off the chart. But wait, does it make sense to you? Like, I do wonder fundamentally, is it just because we're getting some clarity about the future, right? Those small business companies tend to not have the safety nets and supports that the large caps have had during the pandemic, So does it make sense to you, Dave?
Well, I mean, it does to the extent that, whether you talk about supports or just the financial wherewithal. I mean, larger companies have an easier time, not that they've had it easy, but they have an easier time at the very least going out to investors for more money if they need it, or being able to sustain their business to the extent they can, and we've certainly seen that crop up with the coronavirus, no doubt about it. So the idea that things are going to get back to normal, or it passes for normal at some point, you can understand why people get really excited and want to jump in a hurry, and it's certainly shown up with the smaller companies. If you want to know what I'm talking about, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It's interesting, Dave, too, as you kind of go among the major equity averages. I mean, the Nasdaq's just kind of off the charts again, up 34%. But we haven't seen, small caps as a whole, they're up, but not as much. I do wonder how this year will ultimately stack up, against S&P's up about, 12% this year, how it will all stack up against what's been an unbelievable year, if you think about the impact that COVID has had on this economy and the market environment.
Absolutely. I mean, you have to remember the stock market, S&P 500 in particular, viewed as a leading economic indicator. So there's a lot of built-in sort of revival that's reflected in share prices right now. And the economy's got to come through, and, the vaccines have to work and get distributed, and, you have to get the immunity built up. I mean, there are a lot of moving parts here, no question.
Yeah, absolutely. All right, good stuff as always, Dave, and I know you'll be back in a little bit with your stock of the day. All right, you are listening to Bloomberg Business Week. Let's get back to world and national news. Back on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President-elect Joe Biden presented his first cabinet picks today focused on national security. Bloomberg's Irv Chapman has more from Washington.
Biden said they shared his vision of restoring America's world leadership, which was welcomed by the foreign leaders with whom he spoke.
They'll not only repair, they'll also reimagine American foreign policy. And they'll tell me what I need to know, not what I want to know, what I need to know.
Linda Thomas Greenfield, a career diplomat, addressed her role as ambassador to the United Nations.
America is back. Multilateralism is back. Diplomacy is back.
All of the appointees previously served in similar posts. In Washington, Irv Chapman, Bloomberg Radio.
The sitting president is issuing pardons today to 2 lucky turkeys raised in Iowa. President Trump spared both from the Thanksgiving table. Their names are Corn and Cobb.
After today's ceremony, these birds will retire under the care of skilled veterinarians at Iowa State University, a tremendous university in Ames.
Trump wished people a happy Thanksgiving. He also ignored a shouted question from a reporter about whether he would pardon himself. The European Union, the United States, and other donors are pledging billions of dollars in new funding for Afghanistan, hoping to salvage years of work aimed at fostering peace and stability in the country. Today's announcement is also intended to encourage peace talks between Taliban rebels and the Afghan government. at a time when Islamic State extremists have increasingly caused havoc and bloodshed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Charlie Pellet. What were the name of the turkeys?
Corn and cob. Was that a test? I'm paying attention this time.
It was a test. I remembered cob. I just didn't remember it was corn and cob, corn on the cob. All right, so let's talk about a couple stories in the travel industry. We know this is an industry that's been hurt, unlike most, during the pandemic. This story, I talked about this actually for our weekend broadcast, about record airline losses from the virus outbreak will continue to mount next year as anticipated vaccination programs take time to revive travel demand. This is coming from the International Air Transport Association, and I know this just breaks your heart, Charlie Pellet.
It absolutely breaks my heart. Here's why. I want to give this, I love this industry, and I want to give this industry money. $157 billion estimates from IATA, that's the lobby group for the industry.
For losses.
For losses. Now, I've got one idea that could maybe help out this industry.
What's that?
What about selling Americans future travel? Now, 10 cents on the dollar is way too low. 99 cents on the dollar is way too high. But hey, there's a number in between 10 and 99 where we can strike a bargain, and I'd be delighted to give you cash today to travel in the future.
American, Delta, JetBlue, are you listening? Listen, that's actually a great idea, right? It would provide some revenue coming in right now, correct?
Understood. Yeah, absolutely.
And so if they sold a certain percentage of seats, and I guess they would have to figure out, that's actually not a bad idea, Charlie.
And I don't want, terms and conditions attached. You can sell me gift cards, whatever you'd like, but you get where I'm going this. Two reasonable people can sit in a room and say there's a decent number there.
No terms and conditions. I'm sorry. It's just not going to work.
I want to find out, that I can use it when I want to use it. Not, oh, I'm
Some
sorry, we
flexibility.
sold out all those tickets and, no fares
Think
were
about it,
available.
right? If somebody came to you and said, for your family, I'm going to give you, 3 overseas tickets and they're going to cost you $250 each.
I would give them $250 today.
Right. You would do it in a heartbeat. I would too. Absolutely. Good idea from Charlie Pellet. I mean, we know he was smart, but man, this is kind of off the charts. Thanks, Charlie.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Developing story out of Hong Kong plans to abolish its commercial property stamp duty. This, according to the South China Morning Post. The Dow, the S&P, NASDAQ, all pushing higher. A historic day here. Got to find out where NASDAQ closes. The record there, 12,056. Right now, we've got NASDAQ at 12,032. Right to the numbers. I'll give you the story in a moment. NASDAQ right now up 151 points, up 1.3%. Year to date, up 34.1%. S&P up 56, up 1.6%. The Dow's up 451, up 1.5%. More importantly, trading above 30,000, and with 12 minutes to go, looks like it is on track to close above 30,000 for the first time. Right now, the Dow is at 30,044. Records for the Dow Transports and the Russell 2000, also the Philadelphia Semiconductor Stock Index. It too is at a record. 10-year yield 0.87%. Gold is down 1.7% at $18.06 the ounce. West Texas Intermediate crude surging today, lifting oil stocks. WTI up 4.3%. Did trade above $45 a barrel. Right now, $44.92. Again, recapping, we're looking at records on the S&P up 56, up 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the Drive to the Close, and back with us is Hillary Kramer. She's President and Chief Investment Officer at A&G Capital Research, author of Game Changer Investing, How to Profit from Tomorrow's Billion-Dollar Trend. She is on the phone in New York City. Hillary, did you see the Business Week cover last week?
I did, Carol, yes.
I have to tell you, we have quoted you so many times. It's all about Chewy, the cover story. And anybody who's been walking around their neighborhoods during the pandemic has seen lots of Chewy boxes on the curb, because we know that these are essential items to make sure our pets have everything that they need. I mean, you have talked about Chewy for a long, long time. What's your investment thesis still on the company?
Going forward, of course, we have a much fuller valuation, hovering in the $70 range, of course, versus, let's say, the first 3 times I spoke about the stock on Bloomberg when it was in the low 20s, starting in June 2019 into September 2019, November 2019. And I do want to thank you, Bloomberg, your analysts, all of you who have listened to me have given me the opportunity to explain my thesis and why a company like Chewy could give someone a 300% return, and indeed it did. And that's why all these investors today have to be so careful, because everyone's jumping in head first, and they don't realize that when they're buying companies like Trade Desk, they don't realize that, this was a company that had 1/10 of the stock price, a year ago.
Right.
And they don't realize. And so my thesis on Chewy is thrilled to see it. I do think that Chewy could go to $100 a share. I have always maintained that there was this backstop, which is that Amazon would probably love to make an acquisition of Chewy. It makes all the sense in the world. Two-thirds of Americans own pets. We have had this whole humanization of pets. Chewy has a customer service. Now, of course, luck is always important. They say I'd rather be lucky than good, and I did have some luck there in the sad sense that, of course, we have had a pandemic, and that dogs and our animals have become more important than ever. But even still, we would have seen a company like Chewy.com rise precipitously, because it was very simple, and where the differentiation came, and I love that Bloomberg article on Chewy. The whole point is that, yes, Amazon is the 800-pound gorilla, but there are certain products that people do not use Amazon for, and Amazon's amazing growth, so much of it comes from the Amazon Web Services. It's not because they're selling everyone, their Milk-Bone dog biscuits. It's because you have all of these software companies, like the Zscalers, which, are doing so well, that are using Amazon Web Services because none of these companies want to put their software onto their actual they don't want to download it. They want everything to be cloud-based.
Right.
And which reminds me, usually I only speak positively, but if you take a look at HP Enterprises, there's a reason why that stock, trades around $10 a share. It's because no one is buying software. Everything is this annuity-based model now, which is, you pay by the month and you access all the software, including cybersecurity software, offline.
Isn't it, on a day when we're expecting earnings from HP, the old HP, that was the company everyone thought, okay, that's the old one, that's the boring one, we're not excited. HPE is what we're all excited about. HP is actually up on the year, not so for HPE.
Right, and that's as simple as that, because we have seen such a dramatic change in the way that businesses utilize software, download what they've used in terms of that whole kind of cloud-based lifestyle that we have now. And it doesn't matter if it's human resources stocks, as I just said, cybersecurity stocks, or every kind of integration, Salesforce.
Right.
That's the way we go.
All right. So Hillary Kramer, what's the next Chewy in your view?
I have boring Chewies, but it'll make you money. We go everywhere looking for stocks, and anyone who really wants to try to make money out there, you got to go for some of these smaller insurance companies. We love Safety Insurance, SAFT, a 4.9% dividend yield. It's a small cap, a $1.1 billion market cap here, 84% institutional ownership, and it's every kind of insurance. It's whether it's umbrella insurance, title, homeowners, this is the direction where you're going to get a cheap stock. Our other one that we love is Old Republic, ORI. That in particular specializes, amongst other some funky insurances, specializes in title insurance. So ORI, the book value is $18, and the stock of ORI, Old Republic Insurance, is at $21, and you have a 4.6% dividend yield. And so get the title insurance, get the aerospace insurance, and that is where the money will be made, because look, this word software, okay, I have to say, Carol, remember Groucho Marx, and you had that show, and everyone looked for the word. What was that word? If you said the word, a toy duck would, come down that looked like Groucho, and anything today that you say the word software, cloud-based software, that's what it is. It just gets bought up. And of course, I do have a growth portfolio, and I have investors that want to see growth names. And so what do? You hold your nose, and you do what you can, and I just try to take them out as quick as I can once we get those, once we make the number and we get some return. But these are nosebleed stocks right now. They really are. And that's why we're seeing a rotation. Let's say, the Dow, what an amazing day on the Dow, but you also have to look and realize Dow, the Dow has Boeing in it these days, right? So Boeing had finally went back over $200 a share this month. You have Apple in there, and Microsoft, and JP Morgan, and Goldman Sachs. So everything is changing as we know it. But we all have to realize that these are very precarious times we're in. Everyone needs to be careful. I have rose-colored glasses, Carol. I'm like, bull, buy. That's always how I am. But now I want to say we all have to be careful and just wait until we see what kind of changes we're going to have in income tax.
All right.
What kind of selling we'll have.
Got it. Yeah, no, you're absolutely right. And we all know when it comes to something like a vaccine, it's still going to take a little while to get to the other side of this. Hillary Kramer, thank you so much. President and Chief Investment Officer at A&G Capital Research, joining us on the phone in New York City. Stick around. We've got the closing bell in just about 3.5 minutes' time.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
On Wall Street from Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange. As we wrap up trading on this Tuesday, November 24th. Folks from Macy's, by the way, virtually ringing that closing bell. The Dow at a record first close ever above 30,045, surging 454 points today, up 1.5%. S&P also advancing to a record closing near session highs, up 57 points, a gain there of 1.6%. NASDAQ close to a record, no record today, up 156 points, up 1.3%. NASDAQ at 12,036, the record for NASDAQ 12,056. But also have to point out records for the Russell 2000, the Philadelphia Stock Exchange Semiconductor Index also at a record. Dow Transports also surging to a record. The 10-year down 8/32, 10-year yield 0.87%. Gold down 1.7%, falling $31 the ounce. To be clear, gold down today. Up day for the rest of the market at 1806 on the precious metal. West Texas Intermediate crude up 4.2%. 44.85 did trade above $45 a barrel today on West Texas Intermediate crude, and that helped lift oil stocks today. So, stock surge, the Dow topping 30,000. Hillary Kramer is President and Chief Investment Officer at A&G Capital. A moments ago, right here on Bloomberg Business Week, she told our Carol Masser that it is also time for a little caution.
We all have to realize that these are very precarious times we're in. Everyone needs to be careful. I have rose-colored glasses, Carol. You know I'm like bull, buy. That's always how I am. But now I want to say we all have to be careful.
Travel stocks surged today among some of the travel names that rallied. Carnival Corp up today by 11.3%. Rival Royal Caribbean up 7.7%. And shares of Norwegian Cruise Lines Holdings also pushing higher as well today. Again, recapping, stocks at a record, Dow above 30,000. That's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, everybody. Yeah, wrapping up the second trading day of this shortened holiday week. I'm Carol Masser, right here on Bloomberg Radio. Joining me is Bloomberg News Global macro strategist Vince Signorella. He's on the phone from White Plains. And Vince, let me just give a little bit of the big picture, seeing Charlie breaking down those closing equity averages. Listen, check out the S&P, pretty broad-based rally, 406 names in the S&P, higher today, 97 lower, 3 unchanged. And if I bring up those major industry groups in the S&P 500, let me just do the little dance right here on my Bloomberg, bring up the daily numbers. There's 11 major industry groups. All right, so 10 of them were higher on the day. Energy up at the top, up 5.2%. Bottom of the pack, real estate, call it unchanged on the day. Vince Signorella, Dow, 30,000. Who'd have thunk a few years ago?
Not me.
I know, right? So what's up?
I tell you. Well, the markets, to me, and, we've talked about this, you just can't stand in the way of this, as much as I think it's a bit of a fraud. At the same time, like I said a couple of days ago, I wouldn't be a buyer here, but certainly you sell this and get in front of it, and you're going to get run over, clearly. Just ask anyone who shorted Tesla.
Right, right.
But the markets are trading with perfection, or I should say they're pricing in perfection. They're pricing in a virus that's going to hit markets sometime in, early spring and solve all of our problems. They're pricing in a stimulus package, which yet may happen, but yet the size of it is, totally up in the air.
Right.
Potentially, pricing in with Janet Yellen as the treasurer that she's going to push forward these big stimulus plans, which, if we still get a Republican Senate, are difficult, if not impossible, to get through. So I pricing in just a great deal of good news that still has yet to be determined. So it makes me a little uncomfortable to join in on this, especially when I don't know what the virus picture in the United States is going to look like in 3 weeks. So, and the biggest key I would give to people on that is, like, when people are looking at me or listening to me right now going, what an idiot, he's missed this big move. I didn't miss it all. But I will point out,
good for you.
I always look at the fixed income guys as being way smarter than most of the rest of the market, and they're not on board yet. The
Well,
bond
there's
market's
certainly
trading sideways.
Right. They're certainly more moderate, right? They're not, let's all, not everybody in the pool kind of thing. But what's interesting too, Vince, is like, I like the technicals, whether you like it or not, but I look at things like MACD and RSI. I mean, we're definitely an overbought market. And when we see that, we tend to see these averages back off. But having said that, Vince, it tends to be rather orderly, where we get a pullback, everybody calms down a little bit, valuations make more sense, and then people are like, all right, we're going to eventually get out of this, so let's start buying again.
Yeah, no, I totally agree. The longer term for this economy and for markets in general, one would hope the second half of 2021, unless the virus is a complete dud, is for a really good year. I just question the market's intelligence for getting long at levels such as this, when we still have really no idea what the next 6 months are going to bring. I don't know how to price that in. If the models want to price it in, bless them. But when I look at technicals, I see major resistance in the S&P at just around 36, 45, 50. And it's going to be a pretty difficult hurdle to get through, especially first-time try. So I'm going to take, if I were an investor, especially coming into the holiday, and I'm not telling anybody how to trade, if you were riding this and you had a big run, certainly taking some off the table is not a dumb thing to do.
Right. Certainly, if anybody who is in the market right now, and I'm just talking, plain Jane stocks, you certainly are going to be pretty happy at this point in the game. Having said that, what do you guys, what is it that traders are talking about right now, especially as we finally seem to have the transition officially, getting the go-ahead, even though President Trump has not conceded the election. But I am curious what's kind of top of mind for the folks that you talk to, Vince.
Well, you just hit it nail on the head. I mean, markets hate and despise uncertainty. And what Biden seems to be doing, number one, that he now has a transition team moving forward was the big news of the morning. We woke up to that, and that gave the markets a great deal of energy. The other thing, he's picking names that are tried and true with markets that people either know or know by reputation. It's sort of like, we're getting the old band back together. And markets take comfort in that we had 4 years of uncertainty. Any tweet at any moment could shake things loose. To someone who is going to be very orderly, is going to measure his statements, bring the United States back into the global framework. Good, bad, or indifferent, however you believe on that. But, we're going to go back to the way things were most likely in the Obama administration. And markets know that. We know what that is. We don't know what things are now.
We know how that plays out. All right, Vince Signorella, I don't know if I'm going to talk to you tomorrow, but if I don't, have a wonderful, wonderful Thanksgiving, and we'll talk to you.
And you too, be safe.
All right, you too. Bloomberg News global macro strategist Vince Signorella. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Dave Wilson is with us, and I do want to mention HPQ is out. Stock is rallying in the after hours. What's the stock of the day, though, Dave?
U.S. Steel. The company's been around since 1901. Talk about longevity. It's got that single-letter ticker, X. Now, the shares plummeted in 2008 after soaring more than 20-fold in 5 years. They never recovered from that plunge, and this past March, they reached the lowest price since at least 1991. What's more, data compiled by Bloomberg shows U.S. Steel went without a single buy rating from analysts since January. That changed today as the independent firm GLJ Research moved to buy from hold. GLJ founder Gordon Johnson made the call. He wrote in a note that U.S. Steel has, quote, big upside based on industry supply shortages and global price increases, among other things. Johnson's call led U.S. Steel to its biggest gain since March 2016. Wow. The shares rose more than 23%. By the way, GLJ also upgraded steel and iron ore maker Cleveland-Cliffs to buy from hold, and that stock rose 9.3%.
And that certainly speaks to a much more bullish outlook. Dave Wilson, thank you so much. And by the way, have a great Thanksgiving, a safe Thanksgiving, because I know you're not going to be with us tomorrow.
Thank you. You do the same.
All right, good stuff. Dave Wilson, as always. Let's get another check on world and national news. This time, we're headed to Ed Baxter in San Francisco. Hello there, Ed.
Hello, Carol. The message is very clear from Joe Biden. The United States is back to lead the world.
In introducing the first slate of cabinet today, Vice President-elect Joe Biden pledged to the ideals of globalism, multinationalism, diversity, facts, experience, and fresh thinking, and climate.
In calls from world leaders that I've had, about 18 or 20 so far, I'm not sure the exact number, I've been struck by how much they're looking forward to the United States reasserting its historic role as a global leader.
And that theme echoed through all the remarks. Climate change, John Kerry.
No country alone can solve this challenge.
And he said he'll have a seat at every table around the globe. UN Ambassador nominee Linda Thomas-Greenfield spoke of the restoration of diplomacy. And Secretary of State Tony Blinken.
We can't solve all of the world's problems alone. We need to be working with other countries. We need their cooperation.
Hispanic, his secretary, HHS Secretary nominee Alejandro Mayorkas, Director of National Intelligence, of First Woman Avril Haines. President Trump today pardoned the Thanksgiving turkey and took credit for market success. New York City, serious about incoming visitors and breaking the quarantine. Sheriff Joe Fucito saying buses will be met and checkpoints for cars with out-of-state licenses.
In cases of violation, deputies could serve you with a civil summons that carries a $1,000 fine.
Yeah, Sheriff Fucito and both the mayor and governors keep saying this Thanksgiving, keep it safe within the household so that everybody can be around the family table next year to celebrate. Global news 24 hours a day in San Francisco. I'm Ed Baxter. This is Bloomberg.
All right, you are listening to Bloomberg Radio. I'm Carol Massar. Joining me is Charlie Pellet. Hey, Charlie, I do just want to remind to everybody that HPQ earnings just came out, and the stock is really rallying in the after hours. It's up about 9%, so we're definitely seeing that stock take off. Talking about, looks like it's raising its outlook, I think, for the first quarter. Adjusted EPS 64 to 70 cents versus 54 cents. So we're going to dig into that. It's also boosting its quarterly dividend to 19.38 cents a share from 17.62. So that is above the estimate of what analysts were forecasting. They were looking for about 18.5 cents. So that explains why that stock is off like a rocket. Speaking of stocks off like a rocket.
And you mean that in two ways, because of Elon Musk and also what the stock has done so far this year.
It's pretty remarkable. We have a plethora of stories on Elon Musk and Tesla today. First of all, market cap now above $500 billion, $526.4 billion to be exact. It has made Elon Musk very, very wealthy, overtaking Bill Gates to grab the world's second richest ranking.
Unbelievable. And this is a stock really that has a lot of naysayers out there, and this is a stock that just kept on going today. Obviously making a lot of news. I know we had Dave Wilson on earlier in the day talking about Tesla and the inclusion in the S&P 500 index down the road. But since then, the stock has been on a tear, up today by another 6.4%. Record there, 555.38 on shares of Tesla today. And in the year-to-date column, I always like looking at that YTD column on the Bloomberg.
I do too.
563.8% on Tesla. You know, it always amazes me. If I had come to you with absolute certainty with a crystal ball that was infallible a year ago and said, pour into Tesla, you will be rewarded, you probably wouldn't have believed me. But
I don't know. Like, it's one of those names, right, that either people are like all in on Tesla or not. And let's go back a year or two, right? And it felt like the SEC was looking at them and a lot of questions. But nonetheless, man, it is definitely one of the standout stock and stories this year. Thanks, Charlie.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Lots of after-the-bell earnings news. Let's begin with Gap. Third quarter total comp sales up 5%. Estimates were for a drop of 2.4%. Third quarter EPS 25 cents. Estimates there 31 cents. Third quarter gross margin 40.6%. Estimates there 37.8%. Bottom line, Gap shares, they're falling down now by 3%. Hewlett-Packard HPQ, that's HP Inc., it reported quarterly revenue that topped Wall Street estimates, lifted by computer upgrades, customer upgrades of PCs and printers for remote work and school during the pandemic. Shares are gaining in extended trading. HPQ up now by 8%. The Dow, the S&P, NASDAQ all rallied today. Records for both the Dow, the S&P, Dow Transports, Russell 2000, S&P up 57, a gain of 1.6% at 3635, up 1.6%. The Dow closing above 30,000 for the first time ever. 30,046 on the Dow, up 1.5%. NASDAQ up 156, a gain of 1.3%. 10-year yield 0.87%. Gold down 1.7%. 18.06 the ounce. West Texas Intermediate crude up 4.2%, 44.88 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that so much. All right, you're listening to Bloomberg Business Week. We did get some big tech earnings today. We're talking about Hewlett-Packard. This stock, man, is rallying big time in the after hours. Let's break it down with Anand Srinivasan. He is Bloomberg Intelligence Senior Semiconductor and Hardware Analyst. He is with us on the phone from New Jersey. Anand, so what's going on here? Is this all about the dividend boost, or is it just a really good quarter and good forecast?
I think the printing business, which is, remember, hey, Carol, good afternoon.
Hi.
Hi. So the printing business is doing much better than expected. I think what surprised us and consensus is they printed $4.8 billion in printing, which is much higher margin business for them than the PC group. The PC business was a little lighter than we had expected. We had already factored in the strong bounce in work from home, learn from home, and there could have been some issues with some component supplies here is what we're thinking. But PCs were $10.4 billion. We were expecting more like 11.2. Consensus was 10.5. So they missed a little bit on that front. Yeah. But the printing business was a positive contributor to top line and bottom line, and the continuance of that is key, and the prognosis for 1Q is pretty strong as well, Carol.
I could tell you that the printing business is a good one. I just come to my home right now, working from home, because my family is so mad at me because I have got the printer going, nonstop. So much for everything, off of computers. You just get to a point, where I'm tired of looking at a screen. I want to look at hard copies. But more broadly, what is going on globally when it comes to printing?
So one of the things in printing is that you're facing a secular decline from the number of pages being printed, both in the corporation and at home. Obviously, the pandemic has put a little bit of a stop to that on the consumer side, but on the corporation side, it's taken page volumes down pretty substantially. The other part of it is HP is very strong in the consumer and sort of the mid-tier SMB sort of office printers, the printers at the end of your aisle of workstations, if you may.
Right.
But they don't have as much market share in the huge printers that are down the hall in their own copy rooms, if you may. And they're trying to get into that market. That's a very lucrative market. So, and where they have, contracts not only for the device, but also for a long-term supply of toner and maintenance for that. So, they're trying to get into that market. They made some acquisitions from the Samsung print business for technology and the consumer business. But near term, they have to figure out how to sort of arrest the declines in that business. Do I sell the printers at more of a discount and lock in a long-term supply contract? Do I reduce the prices of the supply contract and raise the prices of the printers? That's a very tenuous balance, if you may, to put together that bento box of printers and supplies.
Yeah.
And that's where there's a lot of money, both in revenues, but more importantly, from a margin standpoint. The PC business is interesting. We think that the PC sort of upturn is here to stay.
Yeah.
The first half of the 2021 period will see more PCs being sold We think that there's a realization that one PC per household, particularly old one, is not good enough anymore. We need to have a beefier PC. We need to have more PCs per number of people in the household. And then second half of 21, maybe as employees come back to the workplace, there's some pent-up demand on the PC side as well. So those two things put together, we think 2021 could be a decent year for HPQ. But they have to watch the printer franchise. That's where their bread is buttered, particularly on the margin front.
So in terms of boosting the dividend, smart use of cash right now, would investors have been, disappointed big time if we hadn't seen that? How does that kind of fit into the story and how they're using their cash right now, Anand?
Yeah, so from a capital return standpoint, this is not a story where you're going to see dramatic either acquisitions. Remember, they had that failed Xerox overture, and I think return of capital, buying back stock, cost cuts, and those are the sort of capital structure options that are left to them. So, you have an option here between potential buyback of stock and dividend. And I think given where the stock run has had, so this is a balanced view. And, we like the fact that there is a consistent dividend paying approach here. And the fact that it's increasing is, I think, investors will like it.
Yeah, exactly. All right, I've got a really important question. What kind of pie do you like on Thanksgiving, Anand?
I am a pecan pie kind of guy.
This is why I love you. I'm a pecan pie kind of person.
Yes. Unfortunately, I think pumpkin's going to be on the table this time. So pumpkin is my second favorite pie. So, okay, I'll make do with only 2 slices this time.
Only 2 slices. I know. I just kind of take over the pecan pie. It's mine. I have it Thanksgiving night. It's my breakfast Friday morning. I just take it over.
Nothing wrong with that.
Totally. Stay safe. Have a good holiday and the best to your family. Anand, thank you so much. Anand Srinivasan. He's our senior semiconductor and hardware analyst at Bloomberg Intelligence, joining us on the phone from New Jersey. And just another quick peek on shares of HPQ, because they are definitely rallying in the after hours. This will certainly be one of the stock and company stories we'll continue talking about in tomorrow's trade. Stock right now up about 5.5% here in the after hours. It's up equally about 6% so far in 2020. Now, for those of you listening in New York and San Francisco, watching on YouTube as well, Bloomberg Business Week, we're going to continue. But if you're listening on Bloomberg 99.1 in DC, Sound On with Kevin Cirilli is coming up next. And coming up next, one of my favorite guests, we're talking about Jeannie Zaino of Iona College. Stick around. We're talking the Biden transition. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Massar. I cannot wait to get back to Jeannie Zaino. She is back with us. I thought we wouldn't be talking to her post-election, but we are, so I'm so glad. So we're going to check in with her. She's, of course, Iona College professor of political science. She's also Bloomberg News political contributor, so we'll see what she has to say about the transition and the upcoming Biden cabinet. So we'll get to that in just a sec. Hey, let's get it back to, though, Charlie Pellet, some news after the closing bell.
Indeed, lots going on, and that's what we do here at Bloomberg. We cover it all. Let's begin with a big mover after hours, and that is HP Inc. It reported quarterly revenue that topped Wall Street estimates, lifted by customer upgrades of PCs and printers for remote work and school during the pandemic. Shares are trading higher, up now by about 5.5%. Anand Srinivasan is a senior semiconductor analyst at Bloomberg Intelligence. He was our guest moments ago right here on Bloomberg Business Week.
So the printing business is doing much better than expected. I think what surprised us and consensus is they printed $4.8 billion in printing, which is much higher margin business for them than the PC group. The PC business was a little lighter than we had expected. We had already factored in the strong bounce in work from home, learn from home, and there could have been some issues with some component supplies here is what we're thinking.
And again, Hewlett-Packard Inc., ticker HPQ, down by roughly 5% after hours. We also heard from Dell Technologies. It reported quarterly revenue that topped analyst estimates, shares up by 1.5%. Autodesk, after earnings, beat estimates, shares up now by 0.9%. And Gap, moving lower, it reported third quarter sales that exceeded estimates. E-commerce jumped, but weakness persisted at its namesake and Banana Republic brands. Shares down now by roughly 8.5% after hours. The Dow topped 30,000 for the first time. Investors piled into risk assets as a series of market-friendly developments unleashed animal spirits on Wall Street. Looking ahead to the new year, what to expect? Laura Kane is head of America's investment themes at UBS Financial Services.
We've been calling 2021 a year of renewal for two reasons. One, we're going to be recovering from this pandemic, but secondarily, we've seen a number of transformative trends set in motion by this pandemic. And among those, I would highlight digitalization trends and also the shift toward a more sustainable economy.
And again, records on Wall Street today with the S&P up 57, up 1.6%. The Dow at 30,046, up 454, up 1.5%. NASDAQ higher by 1.3%, up at 12,036. 10-year yield 0.88%. Gold down 1.7%, 18.06 the ounce. And West Texas Intermediate crude surged 3.9%, 44.72 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. So President-elect Joe Biden and his team, they actually held a press conference earlier today, and they are certainly, President Biden, I should say, laying out his cabinet. So we're getting an idea of what a Biden administration will look like. They're also increasingly moving forward on that transition and making sure they are in a good position, if you will, to deal with certainly some of our big issues right now, first and foremost, COVID. So let's get into it and continue this post-campaign conversation. Back with us is Bloomberg News political contributor, Iona College professor of political science, Jeannie Zaino. She's with us once again from New Rochelle, New York. I was so afraid that the election would be over and then we wouldn't get to talk to you anymore.
I'm so glad to talk to you, Carol. I missed you. And of course, this election just continues.
Well, it does. It does. So what's important about the developments? I feel like today was a big day. Interestingly enough, Joe Biden and his, he laid out his cabinet and some of the key positions. We also had President Trump come out in a very, very short press conference. So tell me about kind of how you're viewing it all.
Yeah, absolutely. I think, most importantly, we got the go-ahead from the GSA for the transition to go forward. That's critically important to all of us as Americans. And as you've been talking about, we saw the stock market respond to that, as well as the naming of Janet Yellen in particular to Treasury Secretary. So, those developments, I think in terms of Biden's cabinet picks, I think it's a really fascinating array. It's a diverse, so far the people we've seen have been diverse. They are all, people with deep experience. So I think we're seeing a respect for expertise, which some people have been longing for in the last several years. I think we're seeing a focus on not just diversity, but internationalism. These are people who want to, we heard Joe Biden say this in the press conference you mentioned, that, sort of this international idea, internationalism is back. Allies matter. We can't go it alone. And I think one of the, I think the most, sort of stunning thing to me was to see somebody like John Kerry up there.
Yeah.
Quite unexpected. Yeah.
Right.
So, so much of that diversity, internationalism, experience, and, there's been a little bit of consternation in Democratic circles. Is this too Obama-focused in terms of the picks so far?
Well, is it, Jeannie, is it Obama 2.0 or Obama 3.0, like a third Obama administration?
Yeah, it's a great question. I think we're going to have, I would say, take a wait-and-see attitude, but Politico had a great piece out yesterday, I think it was, and there is, some consternation in Democratic circles that, very much in the way that in Obama's first administration, Hillary Clinton seemed to rule the roost in terms of the picks that happened early on. In Biden's administration, we're seeing a lot of focus on, Obama folks that are coming into the fold. I don't know if this is going to continue, but I think if it does, we may see a division between Democrats in terms of the progressive left and some of the more moderates.
Well, that's a really great point, too. Like, what is the role of the progressives? And to be fair, a party isn't just one thing, right? And if anything, we've seen over the last couple of years that a party like the Democratic Party wants to be more than one thing. So will the progressives have a say in this administration?
Yeah, I mean, I think it's really important that you see people like Elizabeth Warren supporting the picks, in particular Janet Yellen and also Bernie Sanders. But, we've also seen signs from Alexandria Ocasio-Cortez and others that they are really taking a wait-and-see attitude on this. They feel that they have been taken for granted in the past, that they have helped, a Democrat get into office, a moderate, and then they have not been given their due in terms of policy. So I think some of this we're going to have to wait and see. But it's going to be a challenge for somebody, I think, more so than Joe Biden, but a Nancy Pelosi, if she indeed selected speaker again, to hold the coalition together.
Hey, Jeannie, just got about 40 seconds, and then we'll come back and do some more. But I mean, if the progressives aren't represented as much in this administration, is it because the American public isn't still so on board with the progressives? How do you see it?
I do think it's that. I think it's a reflection of Joe Biden. One thing I didn't mention, all of these picks are Biden loyalists. As much as they were from the Obama administration, they're Biden loyalists. And he is not an incredibly progressive guy. I mean, he's a progressive in some senses, but he's also a moderate guy. He's been in Washington. He knows with a Senate this divided, regardless of Georgia, this divided, you're going to have to compromise to get things done. And I think that's what we're seeing here.
Yeah, exactly. And I also want to get your thoughts on Kamala Harris, what her role is in all of this, because everyone has said she definitely is making her mark on this, but I'm curious what you have to see. We're going to come back with Jeannie Zaino. She's Bloomberg News political contributor, Iona College professor of political science. Really just love talking to her about politics, this campaign, and now post-campaign stories. So we'll get back in just a moment. In the meantime, let's get back to Ed Baxter. He's in San Francisco with World and National News. Hey, Ed.
You're right. Nobody better than Jeannie. Hi, Carol.
Hi.
America is back, the theme of the Joe Biden introductions today of key cabinet nominees.
Experience and leadership, fresh thinking and perspective, and an unrelenting belief in the promise of America. I've long said that America leads not only by the example of our power, but by the power of our example.
Globalism, multinationalism, diversity, facts, experience, fresh thinking, climate. And with the U.S. and the globe watching, the message clear from Linda Thomas Greenfield, ambassador to the UN.
I want to say to you, America is back. Multilateralism is back. Diplomacy is back.
And on the issue of immigration, Mr. Biden has nominated Alejandro Mayorkas for that job.
The Department of Homeland Security has a noble mission to help keep us safe and to advance our proud history as a country of welcome.
That for the first time ever, the department will be led by an immigrant, a Latino, who knows that we are a nation of laws and values.
And on climate change, John Kerry saying he'll have a seat at every table in the world. Pennsylvania and Nevada, by the way, have joined the list of states officially certifying the Biden win in their states. President Trump has pardoned the turkey and taken credit for bringing out COVID-19 vaccine, which brings up an interesting poll. Nearly a quarter of New Yorkers say they are unlikely to take it. About a third each say they would and probably would take it, 1/3 each. Wow. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. Did we figure out your price for taking the vaccine? Did we figure that out, Charlie Ballett?
I volunteer, and I would pay for somebody else to get the vaccine. Without a doubt, put me at the front of the line.
Deal. I agree. All right, so let's talk about this story. Mark Bergen, love his reporting out on the Bloomberg. YouTube suspending OAN, right? OAN, forgive me, I didn't say it right. And this has been, we're talking about One American News Network. I know Business Week did a story on it, kind of getting into who it was and what it was all about. But anyway, YouTube is banning them for breaking rules about COVID-19 claims, shuttering the right-wing cable outlet on the world's largest video site for a week. So 1 week shutdown, Charlie.
Exactly. And what's interesting here is it's almost like baseball or football or soccer, depending on what you want to call it. But they got a strike, and after a channel gets 3 strikes, you're out, according to YouTube. You get terminated altogether. YouTube, of course, part of Alphabet's Google. It is also suspending ads from the network for violating other unspecified policies. And what's interesting, though, so many layers to this story, is that OAN, One American News, is a favorite of President Trump, and its online audience was up this month. You've seen some Trump allies turn against Fox News.
Well, check it out, because there's been, talks and speculation about whether or not he goes to that network, because all of a sudden it's become a favorite after he kind of turned his back to some extent on Fox. We're talking about the president. As I said, I'm going to put this out on Twitter, a great story in Business Week magazine that talked about it. What's interesting is YouTube, and you said this strike, Charlie, against OAN, and apparently I guess there was some content claiming there's a guaranteed cure about COVID-19, and YouTube has a COVID-19 misinformation policy. And listen, we've increasingly seen social media step up when it comes to COVID-19 to make sure that there isn't misinformation going out about this. Because listen, to be fair, it's a life or death mistake potentially.
And indeed, it also represents just a fascinating turn of events for what's happening with OAN, and also, as you say, how YouTube and Google are stepping up.
Yeah, exactly, right. And there's certainly been a lot more pressure on them to do just that. All right, Charlie Pellet, thank you so much. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Records on Wall Street. Bitcoin surges. Dow average closes above 30,000 for the first time. S&P at a record. The Dow up by 454 points today. That was a gain of 1.54%, bringing its year-to-date gain now to 5.3%. S&P up 57, up 1.6% so far this year. The S&P is up 12.5%, a record there. NASDAQ, no record today, up 156, up 1.3% year-to-date. NASDAQ up by 34.15%. 10-year down 9/30 seconds, 10-year yield 0.88%. Gold down 1.7%, 18.07 the ounce. West Texas Intermediate crude up 4.1%, 44.81 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Want to get right back to Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino, still with us from New Rochelle, New York, up in Westchester. So, I don't know, when you look at everything that's going on day by day, I mean, does it still bother you, Jeannie, a little bit? Does it still make you a little nervous about democracy and to have a president that will not concede an election?
It absolutely does. And I think we haven't, I think grasped the idea that if it wasn't for that one member of the canvassing board in Michigan, the Republican who should be heralded for voting with the Democrats, they would have deadlocked. And I'm not so sure that the president would have supported the GSA in moving forward on this, this transition. What he was trying to do, obviously, and still is, was to buy enough time so he could get beyond the December 8th deadline, and you could have state legislators, potentially Republican state legislatures, name members of the Electoral College who weren't in line with the voters' choice. So it is an incredibly fragile system, and that kind of leadership and that kind of willingness to stand up and do what's right is incredibly important.
Yeah, I have to say I'm kind of getting like chills a little bit because, we talk about we're seeing how the sausage is made when it comes to a vaccine, but we've really seen how the sausage is made when it comes to politics and really understanding how someone gets elected in this country. And you do wonder whether if we'd gotten to that December 8th deadline, would people rightly or wrongly, done something that would have significantly changed the outcome of this election, an election where the people voted and said what they wanted.
Yeah, absolutely. And, I think I should also mention the hero who I think is the Secretary of State in Georgia who stood up against his party. And, also you look at the Pennsylvania judge with the decision this weekend, who is a Republican, a member of the Federalist Society, who said you simply can't come in court without hard evidence. Chris Christie standing up this weekend, a supporter of the president and saying, so I think we have to, recognize the people who have stood up, and it's not easy, and said, what is right and what is legal and what is constitutional is much more important than what I want for political partisan gain. And of course, I think to go back to the fact that this is an incredibly fragile system, it always has been. Yeah. And I think for me, that's one of the lessons of this election is that it underscores that one person can absolutely have an impact for good or for ill.
So let's talk about that. You and I have talked about it. I know when Jason was here, the three of us talked about it, certainly in terms of that, the system that we have, the Electoral College system. And I thought it was you, and it may have been someone else who talked about that in terms of legislation being introduced or ideas being introduced to change it. There have been a ton of steps, and yet we've made no progress in doing something differently. Does this year show that we have to do something differently, and is there the political will to finally do it?
I would hope so. We have now had 2 elections in the last 20 years in which the winner of the popular vote has not become president. There's a lot of work to do in terms of educating everybody as to why the founders decided to get to institute the Electoral College, and whether or not it's a system we want to go forward with. It's not one that I think we should go forward with. I have great respect for the founders, enormous respect, but they were very clear that it was a system that was a result of compromise at the time and not one that they thought necessarily should be continued for 240 years. And I think if they were to look at it today, they would agree with that. So I do think, and there is a lot of political will out there to change it.
Yeah.
But of course, talking about structural changes like this is really hard to do because it's not quite as exciting or sexy or entertaining as,
Right.
some of the other things we can talk about in the media.
Right. Well, and the other thing is, let's not forget that, we've got really urgent, things kind of facing the nation right now when it comes to getting people back to work in terms of getting the COVID-19 under control. So I do wonder, somebody who watches this so closely, you teach your students, what is it that you're kind of looking forward to when it comes to the political story here in the United States come 2021?
I'm really looking forward to a return to a respect for expertise, understanding that all of us cannot be experts in everything, and we should have a respect for people who are experts in medicine, science, and those kinds of things, and how they can impact policy changes. And so, in the policy that's being made. So I'm looking forward to that. I also am, hoping that we will get some, relief for the American public out of Washington. But I do think that is going to require some structural changes of the kind that we don't have conversations about. And I think that is an extended discussion that we really need to have, but don't have too often in this country. These are things like gerrymandering, campaign finance reform, and those kinds of things.
Right.
Hard discussions, but those are the kinds of things for sustained change versus sort of short-term change that I think we really need to have to go forward.
Right, that ultimately move the needle, right, and move us forward. Having said that, and I know before the break I teased about, the role of Kamala Harris, and I think there was, safe to say, a lot of the American public who thought, okay, it's another white male who's going to be president, but it's a different type of ticket, no doubt about it. And this is a president-elect who has, stressed the importance of the role of vice president, having sat in that seat before and understands what it's like to be maybe part of a partnership. What will be, you think, her impact on a Biden administration ultimately?
I think it's going to be historic. First of all, we have a president-elect who is the oldest in American history, certainly in the modern presidency. That puts much more focus on her. We have somebody who we assume, we're not sure, may just serve one term. So she would be at the top of the ticket next time around. And we, as you mentioned, Joe Biden, having been there for 8 years and having played a key part in the Obama administration, we've already seen that he wants to allow his vice president to serve that kind of important role. So it's not just a seat where you're sort of sitting and waiting, but you're actually active on issues. And seeing her at the press conference, I think, underscored that. And I have to say, Ed Baxter's piece on that press conference had me in chills. The quotes by Linda Thomas Greenfield, amongst others, I thought were incredibly important as we think about what this team is starting to look like as it takes shape. Yeah. And she had so many important things to say, as did Kamala Harris.
So, okay. So I'm going to look forward. Forgive me for doing this, but 2024, will Donald Trump run again? Will Mike Pompeo run?
I think it's fascinating because we're seeing polls out just today.
Yeah.
So the majority of Republicans, I should say, would support a Trump run in 2024. So, again, that can change. A lot can change, as we know.
Yeah.
But, I wouldn't say he's a shoo-in by any stretch, but I think he's got a lot of hold on the base of this party. And that's why we've seen Republicans react the way they have to his unwillingness to concede. And I think there's going to be more of that, certainly in the midterm, perhaps as we get into 2024.
Well, looking forward to continuing our discussions on it, no doubt about it, and what's already been a remarkable political year, but 2020, no doubt, too, will be engaging and exciting as well. Jeannie, thank you so much. Happy Thanksgiving. Have a safe holiday. Jeannie Zaino, she's Bloomberg News political contributor, and she's at Iona College. She is professor of political science there, and she's really been walking us through the campaign, the election, and now certainly what looks to be a new administration come January 2021. All right, you are listening to Bloomberg Business Week. We're going to dig a little bit into real estate. Lots of things going on there because of the pandemic. And retail, yeah, there's a lot going on there as well because of COVID. We'll dig into that in just a moment right here on Bloomberg.